Hey, welcome to the Closing Beat, everybody. Happy Monday. How we doing out there? Happy New Year to you, by the way. It's my first day without soda. So if I was rude to you today, or if I'm rude to anybody today, that's gonna be my fault. You can fight back. What's life worth living if you can't have a soda? Man, you can tell what New Year's resolution is, huh? Now, I'm not quitting soda altogether. Just make this clear. I'm not quitting altogether. I'm just, it's going to have a lot less, a whole lot less. Anyways, welcome to the Closing Beat. We're not weirdos. We are financial advisors here at Jazz Wealth. Hope you'll check us out. We manage long-term investments, retirement accounts, all that good stuff. We're just different than everybody else, and I really mean that. We try to teach you along the way, show you how things are done, show you what changes are made, help you with your finances really in any way that we can. And we'll do that today by going over the stock market here today. Little tax loss or tax gain selling. Anyone recognize that? Now look, historically, the first day of the new year is always the most volatile. So I've been saying that for like the last 2 weeks. We kind of went over the whole idea behind that and how this year could be more magnified because, well, everybody basically has a gain. And why would you take a gain in 2020 if you just had to wait a week or two and take that gain into 2021? It looks like that's pretty much what happened to start the day. Not a lot of fear out there, not a lot of other things going on that weren't already going on that we didn't already know about. So the first year of the new year, first trading day of the new year officially goes down as, again, the most volatile, or for now, the most volatile, but starting to show its little head that way. Also, we had a lot of volume today as well. Let my little screen catch up because it just like hiccuped or something. What's going on there? There we go. All right, we're back. New year. Things got to get fired back up again. You'll have to hit me with the main page again because that thing just blipped out on me. I'll move on over to the charts. Actually, everything. You want to hit me with the charts? That'll get me back up and going there. We've got, pretty much even selling today. If you're taking a look across the board there. The Russell held up the best in my opinion, although everything was down on the day pretty much evenly there. If you look at the S&P 500, you got weakness in all the big movers. Your tax gain adjustments going into this year. You had Apple pulling back a little bit more. Not a big deal, just a little bit of a pullback. Microsoft, same thing. It's been quiet, moving back into that range there. Not too good. Facebook also pulling back. A lot of the big names in there were the big headline names were the ones that pulled back today. Tesla actually posted a gain on the day, making new highs as well, 3.5%. They basically hit their targets for deliveries. Good enough, right? I mean, 500,000, close to that. So they're all good there. I'd also point out that NIO came out at the same time and said, hey, us too. We also, well, they exceeded their deliveries at 7,000 and something, 7,007, somewhere in there, 7,010. So they did good. That was obviously one of the standouts, not in the S&P, but just want to point that out. FLIR. So FLIR was the biggest gainer today. They're a thermal imaging company and lots of other cool things as well. They go into all kinds of different space, commercial, defense space. Really cool company if you want to look and see what they do. They have a thermal skin scanner that's just been on fire, obviously, since the COVID test there. They've also been lowering costs and everything. Didn't have a lot of debt. Well, guess who noticed that? Teledyne. Teledyne came along and said, we're going to buy FLIR. So they're actually coming out and buying them. It's $28 a share plus some shares of TDY or Teledyne coming out. So if you own FLIR and you saw the big move today, that's the reason for that one there. It was a good pick. In my opinion, these guys got a good deal. So that's that. By the way, what we're going to be doing this year, you can hit me with the main page again. What we're going to be doing this year on our research site, actually, if you're not familiar with it, it's $13 a month, something that we put together for people that can't be customers of Jazz. If you can be a customer, then it's free for you. You don't have to pay, of course. But one of the things we're going to focus on this year is stocks that you maybe haven't heard of, right? A lot of people know what Apple does, right? We know what Tesla does. But what about these oddball stocks that are in the S&P 500, all these things that we're researching here anyways? We have a lot to offer on that. Well, we're going to start picking individual stocks and just going through and talking about who they are, what they do, what strategic moves they're making, cash that they have, acquisitions they've done, things that maybe you don't get to see in the headlines because everybody's focused on the 5 or 6 big names. So going to start with Diamondback Energy. It's a company that I'm very familiar with and something that I really like researching. So be on the lookout for that one. All right, moving on. Let's go to the, where are we going to go? Let's go to the Dow here next. The Dow is held back today kind of held back by Boeing, pulled back a little bit more on the day. That was your biggest loser. They got downgraded overall. You had Walgreens Boots Alliance back above the 200-day moving average. They tried to help things today but couldn't quite get it going. And Walmart also back above the 20-day, just ever slightly there, trying to recover going into the new year. So those were some standouts, but ultimately the Dow finished a little bit lower. If you look at something like the NASDAQ, Moderna is going to be a standout here, although the NASDAQ pulled back. Moderna bouncing off the 50-day after quite a bit of a pullback there. They posted something positive about their vaccine supplies, right? You're going to be a little bit faster, have a little bit more than expected there. Also bouncing off the technical area, you like that. Took a few names with it, like Gilead Sciences finally bouncing off the lows there. It was 52-week lows for quite a while there, looking pretty good. In the NASDAQ, you're also going to have names like Tesla again being the bigger gainers today. The biggest gainer was Zoom, actually, after a decent pullback from the 600 area, almost back to 300. So after almost a 300-point drop, you're getting a little bit of a bounce today. That's $22 anyways. And so that's what we have going on there. In our FinTips videos this week, we're talking about how do you add more income in retirement, even if it means having less dollars. So we gave a kind of a cool analysis today talking about sort of a mock customer. It was actually a customer, but we used a different name today for obvious reasons. We're also going to talk about fixing your 2020 mistakes. If you accidentally contributed too much to different accounts, you weren't eligible to contribute to accounts, how do you fix those things? And then on Friday, we'll have a little fun with some 2021 predictions. Not necessarily, I think, this stock goes higher or this one, but more importantly, how sectors do, markets, and things like that. Our Wine and Wealth class this week, if you don't know, every Thursday we do a class for customers. We call it Wine and Wealth. We just hang out a little bit and go over some things. We're going to do an HSA to IRA trick that may come in handy, that is actually fully legal in the very, very back pages of the tax laws there. We'll talk about some things that you can do there, and I mentioned what we're covering on a research site. Let's go to our sector breakdown. You're probably going to have to hit it with the screen again, pop up my sector breakdown, and let's go through and take a look at some of the things that we've got here. Healthcare today, not too bad. So healthcare only down a fraction of a percent on the day. This is actually the best performing sector historically in January. Over the last 20 years, it's positive 60% of the time. That is the best that you get for sectors in the S&P 500. Average gain 1.1%. It was down 2% in 2020 for January, so a little bit of a recovery so far for itself here in January. Only a 0.5% loss. That's not bad. Relatively strong compared to the overall market, as you saw today. Energy held up the best. Energy was your weakest performer last year. We talked a lot about this and we'll continue today. The stocks and the sectors that had the best performance last year were the ones that took a bit of a hit today. Those that had the worst performance, like energy and some of the financials, were the better ones today. Not necessarily that they were positive, although energy was, but the fact that they were relatively strong compared to the market. I want to show you something real quick here. I did a little homework for you. Here's the price of oil. Looking back 40 years, we looked at every single year the price of oil from January to January, and what we were trying to find is any double-digit losses. You know, oil lost quite a bit last year, definitely double digits, no question about that. And we wanted to see how does the next year perform. Is there anything interesting about that? Well, when oil falls double digits, it tends to recover in the next year. That's actually one of my predictions for 2021. You can see that anytime oil falls more than 10%, here's the next year performance off here to the right. 61.5% of the time it's positive. When it is negative, it's not horrible, except for 2015. The average next year gain, 26%, skewed a little bit by 1999. But you can see that ultimately, when there's a double-digit loss, typically there's a recovery, right? No guarantee, of course, but we wanted to see what does that performance look like going forward to give you an idea of maybe what to expect. I think it's going to be a big year for oil in terms of recovery, and we'll probably spend some time talking about oil stocks individually since, well, they don't get a lot of headlines either, right? You don't get to see what they're actually doing. What do these companies do on a daily basis that they're out there? And also, you can imagine, maybe as things hopefully get back to normal in 2021 or somewhat back to normal, we'd see more demand, obviously, in the price of oil, which means higher prices, whether you like it or not. All right, let's go over to, we're going to do a watch list today here. So hit me with the watch list page. We'll take a look at a couple stocks that we've got listed here. We went back and we looked to see what are the best performers in January. Not that they would be this year, but let's just see what happens. To meet our criteria to make our watch list here today, they had to have at least 20 years of history. So we obviously, if they're positive 50% of the time, but they've only been public for 2 years, right? That doesn't really help us. So had to have at least 20 years of history. And actually, if you look back at every single stock in the Russell 3000 names, to see which stocks were positive in January, none of them have been positive every single January there. The best one I'll point out real quick here is Icon. ICLR is a ticker symbol. If you're looking, it's a clinical research company. Down a little bit on the day today, but 85% of the time they are positive with a 4.94% gain. They're on a 4-year win streak here. They typically do well in January's. What I wanted to do was give you a little bit more here today. Ross Stores is going to be the first one you see on our list. We've already gone over Icon there. 85% of the time they are positive in the month of January. They're already off to a good start through December, so we'll see how January goes. 3.33% average. They're on a 4-year win streak here. Something interesting about Ross. You know what Ross Stores is, right? You've probably been there. Sales have been down, but in the last quarter there, they saw an improvement in sales because of a whole lot of different things. They got their stores back open, regular hours. People can actually go in and shop there. They changed up their assortments of how they offer their merchandise. You may have noticed if you've been in the stores. I noticed. I go there all the time. I'm not ashamed. They had a delayed back-to-school sort of season, so that accounted for more back-to-school purchases in there, so they said. And they've actually reduced their debt overall by reducing their interest expenses. Now, if you were to read their financials, what do you think that means? That they reduce their debt by reducing interest expenses. Basically, they refinance their debt at lower rates because they can, not because they had to. So it was a great example of a company doing better with their corporate financials, or you might attribute that to your personal finances, doing better in times when they don't necessarily need to do better, but they can do better. So that's them. All right, Domino's Pizza, a little bit of a bad day today, continues to pull back. This was probably a buy on a pullback here. 81% of the time it's positive in January, 4.05% average gain in January. They have a couple different things they've tried. You may have known through the virus issues there that they did really well. They were one of the ones that did well there because they already had the technology in place to order pizzas, deliver pizzas and everything digitally, right? A lot of them do. Their Piece of the Pie rewards program continues to do really well for them. And I don't know if you know this, but more and more of their sales are coming from outside the United States. About 6% of their revenues come from I think about 11,000 stores that they have elsewhere. They're not here in the States. And so they are now, if you just look at their, if you segregate them and you say U.S. sales, and let's talk about the revenue there and the growth there, let's look internationally as they do. They segment that on their financials. If you look at only their international sales, the sales growth has grown for 107 consecutive quarters. So their efforts outside of the U.S. are obviously going really well. Problem here is debt. Always has been an issue with them. If you look at something like them, for every dollar in debt, they have less than 10 cents in cash. That's kind of a scary way to look at it. They got $4 billion in debt, $350 million in cash. That's been about their balance there. They've gone a little bit higher in debt. But anyway, something to point out there if you're taking a look at that one. Maybe a consideration. All right, Sony. Sony positive, it's on a 4-year win streak, by the way, but positive 80% of the time. 2.48% is the average gain here. And something you may not know about Sony, so nearly 20% of Sony's revenue has nothing to do with games, music, franchise. You may know their license, music library. It's actually in lending. So 18% of Sony's business is actually in giving out mortgages, doing insurance, refinances, general lending, and they actually plan on growing that. So if you're investing in something like a Sony and you go, man, that PS5 was hot, right? Everybody had to have one, and you realize that something went wrong, the stock doesn't perform as well, maybe the lending doesn't go so well. It's going well for them right now, but just saying, something you may not have known there. Did you know that, Cody?
I'm listening to your mic slowly.
Oh, he's catching up.
I'm not listening.
It's dying?
Yeah, someone said you sound like you're being electrocuted. It's getting, you still got time before it concludes.
Oh, no, I just changed the batteries.
Oh.
If we got to bump up the sound, maybe I can go a little bit louder. Huh? Something like that? All right, anyways, So he's on tech support there. All right, BPT, let's take a look here. So BPT, this is a weird one. This company, if you look it up, it's kind of like a weird royalty company for Standard Oil. They don't really do anything, actually, but and nonetheless, it's positive 80% of the time, 4.4% average on a 9-year win streak. Very consistent stock because it's tied to the price of oil, but obviously it's been beaten down just like all the other oil stocks. Let's go over here to a couple more and then we'll wrap this thing up. There we go. Equinix, we've talked about these guys in the past here. It's a data center REIT, so kind of like Digital Realty. We've talked about them in the past. 80% gain, 5.5 or 5.1% is the average gain there. They've done really well with their with the virus sort of stay-at-home thing. Data centers are really at max capacity. They're expanding like crazy. 71 quarters of consecutive growth, if you're taking a look at that. And one thing that's interesting about them is they have 90% of their revenues are recurring. So you don't pay for a data center just for 1 month, right? You keep paying throughout the year. So because of that, these guys are really, they're like the kings of consistently raising money. Because a lot of people will invest in something that's recurring. You like your Netflix, right? Because there's enough people there to support the content as long as they don't spend more to make movies, which they do, but bad idea. Let's talk about these guys. 90% recurring revenue from their just a general global business model here. And so they're able to raise debt and sell shares regularly without really affecting anything. So very good for them and helps them compete with names like Digital Realty. All right, last one here. Go back over to here. Yeah, there we go. There we go. IDEX Labs, obviously in a very strong uptrend here. These guys make like physical medical products, but they're for veterinarians, right? So they're not for humans for the most part. 80% positive in January, 1.39%. This will be our smallest average gainer in the month of January there. Debt is again the issue here. If you ever look at this stock, just something I know off the top of my head there, for every dollar in debt that they have, same thing. They got about 10 cents in cash. So it's not very good. $1 billion in debt, 130 something million, somewhere it's on the screen in cash. So that's a consideration in the long term there. They do keep a pretty decent debt ratio there. So that's what you have. So kind of an interesting way to take a look at things. I'm going to try to be more detailed with stocks as we talk about them for names that you may not be familiar with. Hope you enjoyed. What do we have? Stocks in the news here. You probably have to fire up that screen for me. And we'll do that. Well, you know, you got Enphase replacing, let me just do this one real quick. Enphase is going to replace Tiffany in the S&P 500. That'll come up later this week. Stocks in the news, you got Tesla there, deliveries. I'm going to give it to them. They basically came up with the 500,000 deliveries they were looking for. It looks like Wall Street gave it to them as well. If you look at Roku, they are looking at buying Quibi, which, you know, I watch it every now and then. I'm one of those free TV guys. I watch Pluto TV. Seems like it has everything I need. Doesn't cost me anything. So I watch that. I'm kind of cheap in that respect there. They're looking to buy Quibi. We'll see what happens with Roku. If you look at Google, which would be Google, apparently their employees are looking to start a union. That was squashed big time in the past when they did that. We'll see if their efforts generate anything this time. You got Delta Airlines down about 3.6% on the day. The CEO of the company says that they are going to see positive cash flow by the spring, so very optimistic about their forward movements there. The stock did not like the answer. Bank of America down 1% on the day. It was one of the only financials that really fell pretty hard. Goldman Sachs was up on the day, but anyways, they said Barron's actually had an article over the weekend there, their New Year's article, that said that Bank of America is cheap versus the market and its own historical valuation. So they're saying here at $30, this is cheap. You got to own yourself some Bank of America. Those are the stocks in the news. Dividends coming out. We've got JP Morgan, 90 cents, Comcast, 23 cents. That'll do. I'll take your questions here if I can. See what I can help you with, if anything. Yeah. HNY. What do you like about that one, Doc? Oh, I thought you said HMY. No? Is that what you're asking?
HM1 is Happy New Year.
I thought I thought it was HMY. Oh, thought you asked about HMY. All right.
Someone else asked about HM1.
Someone else? Yeah. See, that's what happens when you don't, have soda. All right. I love it there. Oh, I know he's really short Tesla. I do know that one there. Mm-hmm. I love it there. You like the idea? Oh boy, is your Tesla? We have the bears and we have the bulls for Tesla here. That's for sure. I love it. What do you think about Goldman Sachs? The recent run up. I like it. I don't know how much. I don't know if there's any issues with me talking about this now. But yeah, I mean, it's obviously a strong uptrend there. They are going to be buying back shares. They are no strangers to doing that. And I have no problems with the company and the acquisitions that they've made. Naturally, maybe know a little bit more about the acquisitions they've recently made than most, but I agree with them. I think they're moving in the right direction, especially their personal lending side of things, Marcus, with the personal loans, and they want to expand that. I could see them getting into mortgages and stuff very quickly with that brand. Yeah. Can you start putting in a Roth already? I don't know what you mean. For 2021, of course. Yeah. You sure can. When a company is added or removed from the S&P 500, does that trigger a capital gain? No. For you, it's just no longer included in the index. You will still own the position. Think of the names that got removed last year from the Dow, or even if they were added to the Dow or the S&P, Tesla and things like that. They're just now a part of this index. It doesn't change the exchange. It doesn't change the ticker symbol. It doesn't force any transaction on your part. Mm-hmm. Yep. AT&T has been paying down debt religiously. They have really aggressively, as of early last year or late the year before, decided on paying down debts and getting really slim there. Hasn't really panned off stock price wise there. It's kind of just performing sort of slow and boring there. So tough to get excited about that one. Mm-hmm. You loving the McDonald's pullback? Little by little. It's not much of a pullback, but you can get around $200. That'd be kind of exciting. Yeah, I love it. If you put the full $6,000 in the Roth now, do you have to wait until you have earned that much this year? No, common misconception actually. As long as you're going to report more than $6,000 for the year, it doesn't matter if you contribute it before you earned it. Just as long as the tax forms add up. So by the end of this year, you just have to make $6,000. They don't care that the dollars you contributed weren't technically earnings of the year. So that's it. Mm-hmm. Yep. I love it. All right. I'm going to wrap this thing up. I've got everything in there that I wanted to cover today. Hope you enjoyed. Welcome back and all that good stuff. Hope you have a great rest of your day. Thank you so much for supporting us, and happy 2021, everybody.